What's up, guys? If you're watching on Instagram, I'm going live. Inspiration to my friend Jesse Lee. We're going to just be filming some stuff right now, going through the weekly brief, some videos, so you can kind of see how we do it here in the studio. Most of you are waking up, most of you are not working, but this is when we get shit done. So we're going to go with it. Anyways, if you watch, great. If not, great too. Hey, what's up, everybody? Welcome back to the brief. Another week with your one and only Kenny Simpson. And this week, I want to talk about rates. Rates. We are going to always talk about rates because it's what drives real estate prices up or down, payments, all that stuff. It's what's affecting the market. But once again, let's talk about rates. Interest rates this week are actually chilling out a little bit. I think the market, UN actually came out with an article saying they want all the Federal Reserves to stop raising interest rates. Also, we're seeing, markets rally because they think the Fed's going to start slowing down, hiking. The damage is done. They've already raised too much. So we'll continue to watch, but listening to experts in the industry, just because we have a moment of peace or silence or things chilling out right now does not mean rates are not going to go up to 8% or something. So until inflation comes down, until we see, destruction demand, as they say, things are going to change. This week, I also want to talk about number 2 is also the markets. Like, not all markets are the same. Here in San Diego, inventory is actually declining at a rapid pace. I think there's a lot of markets where some, are going up, some are declining. Why are they declining? People are taking their houses off the market. People are basically not going to, they're taking a house on the market. They're not going to sell their properties. Deals are falling out. They're going to wait till rates come back down. They're going to wait till the recession happens. Or also, if you have to sell your house, death, divorce, partner split up, whatever it is, cashing out, getting some money, there's a reason. So if you have to go replace that by another primary residence with these higher interest rates and maybe a higher tax bracket or something like that, it's not worth it. So people are just hanging tight. The statistic is, I think 50% or below have an interest rate below 3%. I think it's something like 83% have an interest rate below 4% and 92% have an interest rate below 5%. I might be off in those numbers, but it's some crazy statistics like that. So that's what's driving it. The third thing I want to talk about is, yes, Jerome Powell, Mr. Fed. He has tightened the bolt so much. Honestly, if somebody said they predicted this, there's no way. I didn't hear anybody predicting interest rates. Maybe there's one or two people out there and they're on video and they can jam this down my throat. But I didn't see anybody predict interest rates at 7% by the end of this year. The highest from January's predictions was 4%. So we're 3% higher. So nobody predicted this. So when people are making, what's going to happen to the housing market and corrections in this, nobody predicted interest rates this high. So are we going to have an overcorrection in the housing market? Could you see some prices fall more? Could you see things happen? Absolutely. Because interest rates are literally almost double what we predicted. But here's the other thing. If inventory keeps sliding down, that might, it might kind of ease up on the blow if things kind of drop off. And obviously certain markets that are the boom and bust markets we keep talking about, and people mention maybe the Austins, the Phoenix, or Idaho, where people move to these outlining areas, you might see a problem there. So those are the topics next week. We will check in next week with interest rates, see what's happening. But anyways, stay tuned. Have a great week. We'll talk to you then.